All right, thanks. Again, there are a couple of other questions, but based on time, folks, we got to continue with the panel. Simeon, I'll let you get to that.
All right, well, let's bring everybody to the stage here. And as we do so, we'll share just a couple of quick sentences about each of our panelists. I do want to encourage everyone. You saw at the outset that we did close the chat because we want everybody to really be able to kind of focus in and listen in. That said, the Q&A is open. And so we'll certainly at the appropriate time look to field some questions and welcome folks into the conversation. And I'm going to do my best to multitask here. But in the meantime, let me first introduce Dan Burns, who serves as the Senior Vice President and Regional Rochester Regional President at M&T Bank. We heard from Dan earlier, and we're so grateful that he's with us. He's been with the bank for 35 years, and he joined with the bank's management development program, manages the charitable foundation, so we get to collaborate in that regard, and he serves on many important boards throughout the community. We're grateful to have you, Dan. Fahey Massoud is the president and CEO of ESL Federal Credit Union. If you give us a wave, thank you. And he assumed this leadership position in March of 2016. Prior to taking on those significant responsibilities, he was president and chief operating officer for the credit union. He too is extraordinarily active in the community and also serves on the Finger Lakes Regional Economic Development Council and is part of the New York and National Community Depository Institutions Advisory Council at the Federal Reserve Bank. Marty Birmingham, thanks, good to see you, Marty, is the president and CEO of financial institutions and at Five Star Bank since 2013. Mr. Birmingham has a long history of community service and serves on several not-for-profit boards across the community, and we are grateful to have you with us this morning. And last and certainly not least, Phil Moscato is KeyBank's market president and commercial sales leader in Rochester, New York. He oversees client services and business development in Rochester and manages a team that's dedicated to providing the expertise in financial solutions to middle market clients. He is also responsible for collaborating with other KeyBank professionals and community partners to execute community lending and investment strategies. We're going to be eager to hear more about those strategies. With that, give one more hearty wave for our panelists, and we're so grateful again that you've all joined us. Let's start off with just asking you for a response to what's already been talked about this morning, the coalition, the concept of greenlining, and we've got some time today, so you don't need to feel like you have to curtail your answers. We'll start in the order that you were introduced and just give you a chance to kind of talk a little bit, and then we'll have some follow-up questions. Dan, thoughts about our presentation this morning, greenlining, anything that you'd like to respond to?
Well, thank you. First of all, I want to say how much I enjoyed your keynote, because a few years ago we had Boston Consulting Group come in and help us kind of create an economic plan for Rochester, and they came back and said, you know what, compared to all the other cities we work with, Rochester's always down on themselves. You know, we're always negative. We can never do better. We can never. Someone's always better than us, and I think what I got out of your talk was that we have to learn from the past. We can't change it, but we have to really learn from the past. That we have to continue to take a positive outlook on our community, and that change is possible. And as you link that to greenlining, I kind of look back and see, how we approach housing and districting and the history of redlining. And I think about some of the affordable housing developers we have in Rochester are some of the best in the country. So, I mean, we can talk more about that, but my point is your talk and then reading a little bit more about Greenlining, it made me feel that we can do this. We are really, really close, but there are some fundamental changes that would need to be made for us to get there, but it's doable. And I really appreciate you including me today, and looking forward to the discussion.
Absolutely. Thanks so much, Dan. Fahim, I'm going to kick it over to you.
Thanks, Simeon. Happy to be here, and always great to connect with our history, however horrific it might be. And sometimes one can think history is history, but it still lives on today. I really appreciated your comments about people and people leaning in. We have platforms. We are the people who can create the change. There are opportunities today for us. I think we are working better as a community than we ever have. I think we have leadership in the community that has demonstrated a desire to lean in and make the difference. And I think importantly, we have some economic opportunities coming our way with the federal government and state government initiatives to really apply some funds to start addressing the significant disproportionate disparities that exist within our community. Our nation suffers from that, but our community is even worse. Our numbers in our community are worse than the country. When you look at housing, that is a particular area that is very fundamental to wealth creation, to dignity, to safety, to confidence. So I think the concept of greenlining and us as a community and us as financial institutions looking at how we are actually going to lean in to disrupt what has been and create new opportunities for progress is considerable. So I look forward to our conversations on that. I know all the financial institutions present here throughout our community are very interested. I know as individuals, everyone on this call is very interested in this community and looking forward to participating in that.
Thanks so much, Fahim. Marty, want to invite you into the conversation.
Thanks very much, Simeon. And I think you're going to find that this is a collaborative group in terms of the leaders of the local banking industry relative to the topics that we're talking about. And your keynote was thought-provoking, without a doubt. I agree with what Dan and Fahim have said. We have a legacy that we can't ignore. We have to keep our eyes wide open, but we need to lean into our future. And, I'm all in favor of greenlining, the definition that, you put up on the screen, but as well, how we will end up defining it together as we come around the community table. Today, we're around a virtual community table, and I look forward to the day when we can be together, shoulder to shoulder, struggling with the solutions and creating these challenges or taking these challenges and converting them to opportunities. You laid out the economics of it. There's a huge opportunity cost if we don't get after it. And the only other thing I would say is that in the last 96 weeks of this pandemic, I've sent 96 weekly messages out to our associates. So that's the way I'm counting it. We've learned a lot, but we've also, I think, picked up a sense of urgency in our organizations, in the world, in the economy, and certainly in our community. And we need to continue to benefit from that and take advantage of that sense of urgency and that focus and a bias towards action. So I look forward to the discussion as well.
Absolutely. Love the idea of taking action. Phil.
Well, good morning. And I'm probably going to echo the sentiments of a lot of my distinguished panelists that been a little bit more involved in the market over the last few years than I have. But, in your opening remarks, some of the things that kind of resonate with me are, we're a pretty proud and rich tradition and culture in Rochester. I think sometimes we lose focus on that. Your keynote remarks kind of brought that back to the forefront. But what I've seen in Rochester is we've got some great education, we've got some great healthcare facilities, but and we've got that all-American dream, but not everybody obviously is sharing from that. We talk about it a lot. Marty, I like what you said about 96. It's hard to believe it's been 96 weeks, 96 consecutive weeks of giving a message out to your colleagues. That's something that I think this topic has been around for a long time. People are very uncomfortable with it. I had a regional address not that long ago where I said, if you're uncomfortable with it, it's good, because you need to be, because it is uncomfortable, but it's not going to go away. We need to talk about it. I think there's a lot of opportunities within the city. I'm still learning. I don't think I'm ever going to know enough. So I have to keep asking questions. The three gentlemen here on the panel, I'm going to learn a lot from them today. I've learned a lot from them already, just seeing what they've done in the market. And I'm excited to hear their thoughts, and they all do care. Fahey said it, Dan said it, Marty said it. Everybody cares about this. We may be competitors in some respect, but at the end of the day, we're all trying to fight for a common answer, if you will. So I'm excited about the panel discussion. So thank you.
Thanks so much. This really is a key moment in our community. I think it's also worth pointing to the fact that we have made progress. I don't think that anybody can deny that there's still very much a long road to go, but we have made progress. In that vein, I want to invite each of you, and we'll do this in the reverse order, to just share a little bit of a status update, if you will, with the community that's gathered here today about some of the things that you're working on in your respective institutions that are oriented towards greenlining, that are oriented towards kind of realizing this North Star of lifting up and centering folks that have been historically marginalized. So Phil, we'll start with you, and then we'll work our way the opposite direction.
Sure, appreciate that. So, back in 2016, KeyBank launched a national community benefits plan. Originally was $16.5 billion. It was very successful in our markets we represent. We bumped that number to $40 billion. And just to give you some numbers locally, since 2016, we've invested just shy of $500 million in the market. 234 million of that is in affordable housing. 130 of that was in small businesses in the LMI area, which continues to be a focus for us. Then even transformational grants that we've been able to do for those low to mid income areas. To me, I think that's a great start. I was really pleased. I know everyone here has done it. M&T just announced the same thing, which is fantastic. I think it shows their commitment, as long well with the ESL and M&T 5-star, their commitment to the market. But to point what Fahey was saying earlier about affordable housing, that's something that all of us take very, very seriously. And how do we do it? It's the greatest thrill to be able to own their home and get that and the wealth to be able to pass it on from generation to generation. So we take pride in that. We try to get programs that are out there that maybe you don't have the credit acumen right now, but we have programs out there to try to teach individuals how to establish that. Grants out there to try to get individuals to get that all-American dream of buying a home. So these are some of the things that we try to do. I mean, one of the things that we did here recently is, if you don't have that great credit line that some of us, a lot of people work hard to get, we can look at rent. One of the things, and I want to use this forum for this right now, but you look at the rents in the area, how some of the landlords are raising rents to the point where you could afford a very, very large home. Rent control is something that I think we don't talk enough about within our community, and I think it's really been a big issue for those that can't get into a mortgage because the rents are so high and they can't save for other things. So that's kind of some of the things that we've been working on. To me, again, it's the community benefits plan is something that I take a lot of pride in. We're looking to grow that We work with city officials. We work with some of the charter schools as well to try to get education pieces to our youngsters. I think that's where it starts too, is in the young community, is trying to go and work with the school systems. That's behind. I mean, that's not something that we're all proud of. That's something that needs to be addressed, and it is being addressed, and we need to work on. I'm thrilled to have Mayor Evans, running things now. I've always been a big fan of him, so I'm looking forward to what he's going to do here in the future. That's some of the things that KeyBank's been working on, and addressing greenlighting and really trying to go back to where what all started from the redlining to now more of a positive outlook for things within our residents of Rochester. So, thank you.
Thank you, Phil. We've got some notes, and we'll have some follow-up questions for you, Marty.
Simeon, conversations like this are very sobering for me because, what Phil gives away in Rochester is a big chunk of, our resources. We're a small institution. We're only $5.5 billion, and we serve a pretty broad geography of 14 counties that basically go from Buffalo almost to Syracuse, down to Elmira, almost to Jamestown. So, we are truly a small community bank, which is a strength relative to this conversation and an attribute where everyone who works at Five Star, almost 700 of us, live and work in the communities that we serve. So in terms of our journey, and we are on a journey, and I agree with Phil, I'm a lifelong learner, and I hope all my associates and teammates are as well. We have been developing products and programs to support this aspect of our very important mission in terms of serving our associates, our customers, and the communities, as well as our regulators and our shareholders in terms of key stakeholders in our institution. But we have comprehensive deposit products, which is a great start for individuals to begin to build credit history and access credit on affordable terms. Our Progress Checking account meets all 18 core features required by the Bank On standards, as well as the FDIC SAFE guidelines. Relative to community development, we walk that talk through the leadership of Carla Gadley, who serves as the Senior Vice President and Community Development Officer. She's known probably to many on the call this morning as an advocate and cheerleader for our region. She's had broader responsibilities at other banks, but for us, she's covering our region, and she's advocating for the coordination of services, financial and community based, that contribute to improved outcomes for low to moderate income individuals and communities throughout our operating footprint. And we also have built in our residential lending effort community development mortgage loan officers. And that is intended to deliberately increase access to residential loans and low cost deposit product opportunities in LMI neighborhoods. And in Rochester, Rosalie Ramirez is a force unto herself. She's done an outstanding job leading this effort for our bank, and she's helping customers realize the dream of home ownership, and a rainmaker extraordinaire, as well as bilingual in terms of Spanish-speaking, supporting Spanish-speaking mortgage loan customers. Specifically, some products that we've developed in the last several years is what we call our Home for You mortgage program. And that's designed to provide easier access to home ownership for borrowers with incomes less than 80% of the area median income. And so this program features a low down payment, no private mortgage insurance, and down payment and or closing cost assistance for qualified borrowers. And that represents grants up to $3,000 for every loan. So in 2021, we did 102 grants. That was a $300,000 total in terms of that of the grant total. And our production was 50 million bank-wide and 14 million on average in the Rochester MSA for the last several years related to this product. We also have a home buyer dream program that we participate in with the Federal Home Loan Bank of New York. It's administered on a first come, first served basis. Some of our other panelists, I'm sure, are participating. So in 2021, we helped 43 customers in Monroe County obtain and take advantage of grants of up to $9,000 per borrower. And we did that for across our footprint for 88 customers. We also have a neighborhood loan, which provides easier access to home ownership for borrowers who are purchasing properties in low and moderate income tracts. So those loans feature low down payment and no private mortgage insurance requirement. And of course, we're also a part of the Sunny May program. So we're also partnering with community providers relative to financial education and literacy. Generally, we're not doing that ourselves, but we are supporting those efforts. I would say that, in the last year in the pandemic, the PPP program was a great opportunity for the banks to be, as Dan said, to serve as first responders. We did that across our footprint, as all these banks did, in a very meaningful way. For us, it was 1,700 loans and 270 million in balances and connected 18,000 jobs in 2020. Importantly, it was almost a year ago today, though, that we hosted a collaborative conversation after the first round of the PPP in partnership with Empire Justice and the Genesee Co-op, which is a local credit union, as well as a CDFI that was purely focused on the PPP program. We got the sense that, underserved small businesses, minority businesses were not getting access to the program. It was, as we know, it was super demand and there was a lot of chaos in the world. And we really wanted to have a conversation around making sure that we did what we could to help with accessibility to the program. And we designated this facility in downtown Rochester, as well as our Citygate branch, as resource centers to try to help with the second round of the PPP. The other thing I'll share with the group is that, in an era where the banking industry is dealing with existential threats from fintech and other forms of delivery of banking financial services from non-banks, we are continue to develop banks and to open banks. And so since being named CEO, we've opened 7 bank branches. 6 of those have been in the cities. Right here in 5-Star Plaza in downtown Rochester, we brought 150 jobs from a suburban office park to the city center. We opened up a branch and we also have done that at Citygate, which is located at around a low to moderate income neighborhood. And we've done the same in Buffalo at Fountain Plaza, the city center, Elmwood Village, which is part of a massive redevelopment project in the city, as well as on Seneca Street, which is another low to moderate income area. And then finally, I would just share relative to our resources. We have been active in the affordable housing space, where we have used our balance sheet both as our capital as a direct investor in affordable housing tax credits, as well as lending to developers that Dan talked about. And those projects include locally our Union Square on the Inner Loop, which is a supportive housing project, includes 66 units for residents living with HIV and those in need of help with daily living. The Veterans Outreach Center, Liberty Landing, which includes 33 units of affordable housing. The lease to own affordable housing program for 41 units in the city of Rochester, the LP at West Side Project, 55 units of affordable housing in Batavia, 40 units of in the village of Albion, targeting income levels below the 30, 50, and 60% of area median income. Perry Knitting Mills out in Wyoming County and Perry, and the Gerald Block Apartments in Elmira, and the Pines of Parrington in Fairport. So I'll stop there, but I would just suggest that I think we'll hear a theme from all the panelists, that the notion of greenlining is something that hopefully we're well on our way and we embrace and look forward to, again, continuing to evolve and iterate on that journey.
Marty, thanks so much. I want to pause for a moment and just encourage the audience. If you've got questions, you can put them in the chat. There are some coming in. We're going to move towards asking some of those questions. And then in the meantime, I hope you have out your pad and your pencil and you're taking notes and that you're capturing so much of the useful and interesting information that's being shared. Fahim, I want to turn to you. What's ESL up to with respect to greenlining and getting money into the hands of people that are on the margins?
Thanks, Simeon. And I'll just start a brief background on ESL. As most people probably know, we serve the greater Rochester region, purpose-driven organization with a focus on helping our community thrive and prosper. And very specifically within our mission, we state that we share our financial prosperity with our community and back with our membership. That's the design that we operate under. And our actions relative to greenlining and to close the racial wealth gap have been focused on aligning with our purpose, as I mentioned, to help our community thrive and prosper. We're currently working on expanding access and attainability of home ownership and improving the financial health of community residents to ensure equitable wealth can be built in communities that have been denied such opportunities for generations. For home ownership, we are specifically focusing on expanding access and attainability for Black and Latino residents throughout Greater Rochester. Last year in August, we launched an ESL first-time home buyers grant for Black and Latino residents that provides up to $10,500 for down payments and closing costs for income-eligible participants. And what we're really trying to leverage the opportunities in regulation. As you all know, we are a heavily regulated industry, and but there are opportunities, and the Equal Credit Opportunity Act and Regulation B allow lenders like PSL to create special purpose credit programs in order to extend credit and provide targeted benefits to groups of economically disadvantaged, and I quote, people who would otherwise be denied credit or receive it on less favorable terms. So certainly opportunities to leverage regulation in that regard. Certainly the multiple reports about housing disparities in Greater Rochester have shown that home ownership rates of Black and Latino residents are less than half that of white residents. In addition to that, it's not only the home ownership rate, it's the value of the homes are substantially lower. Because of this documentation, special purpose credit programs can exist in Greater Rochester, and financial institutions can build grants that provide funds directly to these residents to improve home ownership opportunities. This grant complements other first-time homebuyer grants, such as the Homebuyer Dream Program that provides significant grant benefits to income-eligible New York State residents. And I know my colleagues here at other financial institutions offer a similar program, and other mortgage products such as Home One and Home Possible options that offer more affordable mortgages than are readily available through conventional mortgages. I think it's very important for us to not only provide grant funds, close on a mortgage, and let that be the end of our relationship. Home ownership is not a single moment in time, but it is an exciting new phase of life. At ESL, we want to, and I think all of us financial institutions must serve as a guide and a resource for homeowners, especially first-time home buyers. We must be a resource that they can turn to for advice in times of need or for best practices to ensure that their homes are appreciating, because we must ensure these homeowners can build equity in that home and tap into it when necessary. There's a whole other section of what happens, the bias introduced in home ownership when communities, people of color are in there, and it has nothing to do with anything other than bias. There's a lot of evidence that home values fall, not due to any other factor than the fact that people are of color. Complex thing that we have to find pathways to address. Also, for financial health, research has shown that close proximity to bank branches improves the financial health of a community, as it provides important access to the financial guidance and solutions residents depend on. We have opened our newest branch in the city of Rochester's Edgerton neighborhood, with plans for 2 more branches to be built in the city, again, close to people who have been underserved and underrepresented in banking. I'll make the point about, I think some comment was made on effort. We are not a highly trusted sector of the economy by a lot of people, and that is due to our history. We have to lean in to build that trust. And in our thinking, one of the things we have to do is to go into neighborhoods, get closer to people, and demonstrate that we respect the community and will be part of it. So as we execute all these investments, we are also looking at other opportunities for future implementation. Certainly for this home buyer grant program, we will be continuing to analyze and report to our regulators any findings that we've had and adapt the program to those findings. We are looking at continuing holistic neighborhood reinvestments. We want to see how we can reinvest in throughout the city of Rochester to better support home ownerships, and also on strengthening the commercial corridors throughout the neighborhoods. I think to the point of affordable housing, like other financial institutions, we are also playing an active role in that. I think it is very important for us to focus on the operators of affordable housing as we enable that. Quality affordable housing is the important thing. I think Phil mentioned affordability. The other part is quality of life within that affordable housing. And I think that is really important for us. And importantly, greenlining and all the conversation we are having, it can't be this one and done moment. We are all in this for the long haul, to continue with our current plans, to investigate new ones, and as Marty said, to learn along the way so we can remove the disparities that have truly plagued our community for too long, and resulting in us building equity and justice for all and driving our economy upwards. So I'll stop my comments at that and look forward to any questions that might come from that.
Thanks so much, Fahim. Some rich material there. Dan, I'll have you close us out on this question.
Thank you. I guess it might be helpful to, first of all, I want to quick shout out to Beverly Fairbrooks and Allie Sachs, who helped me so much in this work, and I want to thank them for all their support. And I think it's important. I think Fahim said this the other day when we were having the pre-call. Banks have a lot of work to do, you know, just like our community does. And we're very proud of some of the efforts that we've made, but there's also these aspirational things that we have as institutions. And, you know, I'm a youngest of six, grew up in Batavia to a middle-class father. My mom and dad didn't go to college. I opened my checking account with M&T in 1983. I got a job with M&T in 1986. We were the fourth largest bank in Buffalo, about 40 branches. And today, through 30 acquisitions, we're going to be the 12th largest bank in the country with this latest one with People's. And we're just between Buffalo and Baltimore. So a little history there. But the reason why I bring that up is because our CEO, Renee Jones, who's one of 4 Black CEOs in the Fortune 500, went to the Simon School. He has this aspirational view of M&T, that we want M&T when we open a branch and when we go into a community, that it's like a new Wegmans opening up. You know, and all of us are, you know, from Rochester, we're like, why are there hundreds of people waiting to go in to buy bananas at a new Wegmans in Brooklyn? You know, it's kind of tough when you're selling money as opposed to bananas and fruit, but it's that kind of excitement that, you know what, this is going to be really good for the community. You know, a Wegmans going in is really good for the community. So aspirationally, that's kind of how we would like to be seen. And as we've grown, we may be a large bank, but we still believe we're a community bank. And even more so, we believe that we're a bank for the community. And Bob Wolmers, who was our long-time CEO, passed away a few years ago. He said, if the community succeeds, so too will M&T. And so we have a lot of initiatives that we're doing on the macro level, but we also get the autonomy in markets like Rochester, where I work with a great team, to do some things on our own. So some of the things we're working on, I know the Urban League has had a lot of work on this, and Chanel Hawkins talks about changing our groundwater. And that really struck with me in terms of what M&T needs to do internally with our own people. And so through our resource groups, our Women's Interest Network, our Pride Group, our Rock Strong Group, we are educating our employees to really learn more about these issues and to try to, change our own behavior and recognize that, yeah, we may be good people. We think we are, but we aren't. We have so much more work to do. We have created internship programs. As was pointed out, I think all of us have really done a great job on the affordable housing side of things. And I think that's a real a critical asset for Rochester is that, as we said, we have so many great affordable housing developers in our community. We also have created new business models. For example, in Buffalo, we've partnered with the downtown YMCA to open a branch together. We're kind of looking at one here in Rochester to do that. Beverly and I and Carlos Carbalata have met with, I think 7 or 8 Black ministers twice now to talk about what are the issues in the city and how can M&T play a more active and effective role there. I think those have been very fruitful. And then through our foundation, every request that comes in, we are trying to focus on how we can work our grants into things that will deal with some of these issues: diversity, equity, inclusion, racism, social injustice. How can we use our dollars to make a bigger impact? And I guess in terms of the other things, we've been the top SBA lender for the last few years. We're not trying to pound our chest, and I know Barb Kirchhoff's probably on the phone, and she and I were talking about CRA, and M&T's gotten the top rating for 40 consecutive years. Outstanding. We're very proud of that. But Barb reminds me that CRA still has work to do. It's not, it's color neutral, right? It's about low income areas, low income individuals. And so I think there is some work to be done there. But in terms of products, one of the things I'm most excited about is actually today, a group of our employees are on the Wall Street ringing the bell to celebrate our 100th multicultural branch. And what does that mean? Well, for the last few years, we've had a multicultural banking segment. And we are trying to make our branches, look at our branches and find out the demographics of the branch. For example, in Rochester, our Irondequoit Ridge and our Waring Road, 15% of our clients there speak Spanish. So we have identified that and made sure our employees can create a culture within that branch so that there's this feeling of comfort when they come in, and that we can be considered a gathering place in the communities that those branches are in. So that's something we're really excited about. And as Marty had pointed out, and Fahim, and we all have products now that we've used technology and other things that can really make things easier for people. Because and I could go on with this, and I don't want to take too much time, but I think about what the issues are with housing. To get to the housing issue, and this has been pounded in my head from people I really respect: Carlos Carbalata, Walter Cooper, Emerson Fulwood, Joe Klein, that it all starts with education. Now, we're not here to talk about education. I get that, but education leads to workforce, leads to housing is kind of how I see it. And so as a community, I think we should build a model around that, because let's face it, if someone has a high school education or doesn't go through high school, a minimum wage job is probably a likely job for that person. If you add up what the minimum wage, the annual rate of income that is, you cannot afford, in today's day and age, you cannot afford quality housing. That's a problem. And I think it's, as much as we try to create products and services, we're all assets and liabilities and income, net income and cash flow. And so to get to the housing, we've got to look at these other pieces. And I think the other kind of 2 other things I want to talk about as we think about housing: affordable housing is unbelievable. We all have mortgage products that are no money down, no private mortgage insurance. And then the other area that has gotten some work here, but I don't know how aggressive we're going to be with it, is this opportunity zone concept. I really believe that is something that will incentivize developers to go into those areas where that are, as Malik Evans would say, that are blighted. And how do we create neighborhoods again in some of these zip codes? And I know we have great foundations like Farish, Konar, the Rochester Community Foundation. We have the best United Way in the country. We have the best community college in the country. So our assets line up really well. And to your keynote, I think we are well positioned to create what could be one of the best greenlining communities in the country. So I'll leave it at that.
Perfect. Thanks so much, Dan. So again, really interesting thoughts. And what I'd like to do now is we're going to turn to trying to weave in the questions that have been coming in. We've got some good ones. At this point, I'll just ask the question. Whoever feels you have an answer, you have something to share, just feel free to jump in. Everyone doesn't need to answer every question, and we'll just keep moving our way through. One question that comes up is there's the old aphorism that culture eats strategy for breakfast, and each of you are in the senior leadership at the pinnacle in a lot of ways of your respective organizations. What are you guys doing with respect to your respective organizations on the internal culture side to make the ground fertile for the ideas that you've shared with us today? Anyone can feel free to jump in.
I would just say that, from a strategy perspective, one of the tools that we use is a strategy map that we can share across our company, our organization, that our board can use. We can share with our key constituents. And the foundation of that is a human capital strategy. And from my perspective as CEO, culture is a keystone. And I've been a supporter of what we call the 5-star experience from the very beginning. It's a cultural framework that brings us together to how we can ultimately drive high performance to the organization across our functions. And in the last several years, last 96 weeks, we've embraced, how we can continue to evolve the culture relative to diversity inclusion. And, that ranges from standing up a diversity inclusion advisory council for our company, pursuing the Gandhi training, both for our executive management and now our operating committee, and continue to cascade it down, and to recognizing Juneteenth as a national day in our organization, and celebrating it. So, and then working all of those efforts into our strategic initiatives, our business plans, et cetera. So again, this is part of the journey we're on. And, being self-aware and, I think positive in terms of learning, we're continuing to evolve our culture.
So for us, perhaps one of the learnings over the past few years is to expand that concept of culture into values. And we've focused more on our values. And I have to say, through the pandemic and some of the challenges of the past few years to connect 900 people on a common set of activities, we've tended to go to our values. Now, the translation of the values through actions, through living them, through rewarding how they're lived, really becomes that sort of surrounding culture for us. And one of the pauses what someone made us realize is perhaps sometimes when we say culture, it's not quite as inclusive because we look for people who fit what's comfortable for us. So that's why it was translated more into values. But to that point, like Marty, we think it's very important to add information to the discussion. Unfortunately, there's a lot of noise surrounding us in our environment, which is not necessarily information on this subject. There's a lot of talk coming at us from whether you read the news, listen to the news, go on social media. So somehow you have to break through with some information and create dialogue, create opportunity for dialogue. And through that dialogue, connect people with the actions the organization's taking. For us, we have selected 7 specific areas within our strategy by which to demonstrate that we are evolving as an inclusive organization. Everything from what we're doing in our hiring practices to our market strategy to our advocacy action to our philanthropy, all of those areas we are using to demonstrate what being inclusive is and what adding diversity means. And we find that by telling stories of what we're doing, sharing what we're doing, what that means to people tends to cause the culture, if you will, to evolve. So it's a difficult, painstaking process, but one can speak at people, but in the end, it's what the actions demonstrate and the reinforcement of those actions demonstrate helps evolve the thinking. Not to mention, there are people who, I really believe we have thoroughly decent people in our organization. But I know I have biases, but I need to understand my biases and learn how to manage and confront them. And we're finding ways to engage on that.
Terrific. Thanks so much, Raymond. Don't want to cut anybody else off from the question, but so unless there's a burning answer, I'm going to move on to the next one. One comes in that asks about, I'm going to add on to this question, that there was a bit of a fire hose moment. There was a lot of information that was shared. And so anyways, this question is whether we can get a list of the kinds of programs at the various financial institutions. The person says that they'd love to look more closely at these efforts and share the information within their network. Going to wrap that with, how do we make sure that people are actually aware of these programs, and is there a place to gather any of this information?
There is. I think forums like this are great. Certainly, we always use modern technology. We always use websites, but also not everyone has access to the website. So I think, having these forums, we have a lot of our colleagues that are involved in not-for-profits in our fine city. I think getting the word out from that, the old-fashioned blocking and tackling, the old-fashioned just word of mouth, I think is part of it. Happy to be able to share, programs that we have in place right now. But I think, part of it is on us as senior leaders, and I think everyone here does a really, really good job of that, of just getting out. And Fahim, I couldn't agree with you more. You have to talk about these things. You can throw dollars at it, but that doesn't really solve the problem. That's just a Band-Aid. I think you have to get out in these circles and work with our city officials who are all, we're all aiming for the same goal, which is to try to help individuals realize whatever dream that is that they want to realize. That's part of our job. But I know we could go into different areas of this of what I think we should focus on, and we don't have time for that. But I really think that without, there's information on websites, but really it's working with non-for-profits who then can go out along with the four of us and talk to the programs and try to guide individuals through the programs from start to finish. It's not just make the introductions and let it go. I think we have a fiduciary responsibility to make sure that individuals really know what they're getting into, that they're really educated, and we see it from start to finish.
Yeah, I think that, just feel free to go into a branch and I know I can't believe how many different mortgage products all of us have to utilize, and depending on the situation, what would work. And that's our job as bankers to come in. How can I help you? What are you thinking about doing? Have you thought about this? Have you thought about that? And we all have great branch retail folks in our branches that are there to help. Call each of us individually. We're all very approachable, and we'd greatly love to tell you what we have going and take your feedback too, because there are a lot of things. We have a new tool called My Voice that if something doesn't feel right with a customer, or there's a product issue or something like that, we can send it into the system and get it fixed or create a new product. So it's easy for us to think what our customers want, but it's always nice to hear what you think.
Terrific. Just a quick time check. We've got about a half hour to go here together, and just so that you all know, and that the listening audience does as well. One question that comes in is around changing the narrative of Black and Brown communities with respect to the capacity to be entrepreneurs, business leaders, and people who bring value and should be invested in. And there was, I know, Phil, in your comments earlier, you talked a little bit about the expansion of some of the credit considerations. Others kind of echoed that position. Can you all just talk about the extent to which you're observing any change in the perceptions and what that looks like practically in terms of investments in entrepreneurs, business leaders, and reconceiving value.
I'm trying really hard not to give out any trade secrets to my competitors here, but one of the stats that I looked at as I was preparing was Black businesses, I think they declined 41% from February to April of 2020. And, that's a staggering number. And as we see in the marketplace, people may not notice this, we certainly do. We have a lot of business owners that have sold out to out-of-market companies. And at the same time, we have all these incubators out there. NextCore is a great example of one, where Luminate and the Q at RIT, where there are so many different programs out there to, even in Rochester and Buffalo, you can take a test to see if, you may not have a college degree, you may be in high school, and you can take a test to see if you have an aptitude to program. Because let's face it, technology is kind of the hottest job right now. So I think that is a really important question around, people said that, with this pandemic, a lot of people are saying, I don't like my job anymore. I'm going to go try to do something else. And I think it's an opportune moment for all of us as bankers to find those people and say, okay, what business are you interested in? Let me connect you with NextCore. Let me connect you with the Q, and let's see if there's a business that can be made out of this. But I think that is so critical to how, in the future, how Rochester and the community will thrive.
Yeah, I think this is a very relationship-driven business, right? Understanding customers. And I think we need to do better in developing relationships with communities of color, business owners. So there's a long-term approach and a short-term. One is the acknowledgement maybe that we do not have the networks or access to the networks or connections to the network. So how do we leverage institutions within our community who do have that access, the Pat Stones, the urban leagues, and give them funds whereby they can get and deploy those funds into businesses because they have the connections, they have the awareness. On the other hand, for us to longer term say that we are developing those networks, whether it be through increasing diversity among our employees, increasing access within the communities, getting closer to the communities to develop these relationships. So as Dan said, we're very responsive to customer input, but there needs to be a vehicle connection to create that input. So I think it's the focus on developing the relationships, developing the connections to increase the awareness. And I do think within the market, we are all, once we know of the opportunities and the challenges, we have the ability through products and services to get supports out there, to activate the capital necessary.
That was both.
I'm sorry, go ahead, Marty.
Guys.
No, go ahead, Marty, I'm sorry.
I just said that was very well said. I agree with both Dan and Fahey.
Yeah, I just wanted just a quick follow-up question with respect to the question of relationships. Curious for anybody here, the experiences that your institution had with the Paycheck Protection Program and any learnings that you may have walked away from in engaging in that process.
Well, I'll just say at M&T, and I tell people this, I've been with the bank a long time, but it was our darkest moment and it was our brightest moment because the government said, hey, the window's opening and everybody can start applying at their banks. And I know the four of us on the phone were like, what are you talking about? We haven't heard anything.
Yeah.
And, but having said that, I think we did 34,000 applications, PPP loans. So, and we did 5,500 in Rochester, I think was the number. But the point I want to make is that learnings from that was the small business owner struggled. Some of the small business owners struggled with what might be considered if you have an accounting background, a pretty easy application. So we think we got everybody that needed it done. I think it was a pretty good, 99% kind of thing. But there were some, churches, for example, that, how am I going to, inner city churches, how am I going to figure out what, they're using QuickBooks or they're using, some other method that isn't going to apply to, in terms of the application process. So there were some of these exceptions that I think, we've learned from, and I think the second round we were better than the first round, but there was some of that. I'd have to admit, I think my colleagues would admit too, I hope, because that's
I agree with Dan. It was good and bad. I mean, when the first 48 hours when this thing came out, we just didn't, the banks just didn't get a lot of intel. We're kind of, blindly going through this and trying to keep everybody at bay and keep, that's just not just our employees, but more importantly, the clients. Hopefully we never have to have a round three. I don't know if I could take it. But Dan's right. I think you'll learn from it. I would hope that the small businesses, I got frustrated with some organizations across the country that LA Lakers, for example, that they rescinded it, but they applied for it and got it, and they rescinded it back. But you've got real individuals that needed it, whether it was the churches, not-for-profits, but really the small businesses, which we all know are the backbone of the economy in the country. We like to think that we got everybody that needed it. I think all four of us hopefully feel better about it today than we did almost 2 years ago. But it was definitely a learning curve. And again, one that I hope none of us have to ever repeat.
I think to Dan's earlier point, though, in retrospect, when you look at who received the PPP loans, there wasn't access for many people. And there was, so again, all of us have to prioritize when you've got limited resources and you have your existing customers. That's where the priority goes. If you don't have relationships that are diverse in nature, the diverse population gets left behind. So the disparity was exacerbated during the time of PPP, which is why at the back end, I think us and other financial institutions tried to trigger through, as I mentioned, the Urban League, other partners, distribution of funds, because we saw that. We saw that had not happened. So that's where, as we started hearing about that disparity and observing it, actions were taken. Obviously, it will never be to the same extent as what would have happened at the front end.
I think that's the real big deal in terms of the context of this conversation, Simeon, that it does emphasize, we've got a lot of work to do. In this crisis, it was a shining moment in terms of the connection of fiscal policy, monetary policy, ultimately getting the first responding aid into the businesses on the main street. But there was a disparity. And that's why, as I said earlier in my comments, on January 14th, 2021, we held a similar, format like this to try to help those that didn't get the access in the first round. As all my colleagues have said, I think we tried the best we could, but clearly there are takeaways to your question, and we need to apply those learnings.
Yeah, it was. It's an interesting moment. I appreciate the framing, particularly around some of the relationship building. And I think one of the interesting dimensions of this pandemic is that it revealed a lot of the kind of weakness that was, in some sense, a pre-existing condition, right? And so then exacerbated the relationships. One questioner actually wonders on the other side of the ledger, if you will, how the local banking and credit union community is fostering, transacting, buying, and contracting consistently with local Black and Brown businesses. And the questioner recalls some creative things that some of your institutions have done in the past. Any thinking plans and with respect to contracting and retaining the services and commodities of local businesses that are owned by Black and brown folks.
Yeah, I would just say we have for the last few years created a supplier diversity program, and so it is like when we have a need, we are following that path to find diverse suppliers. It's really important to us. We're not there yet, but we're making really good progress in doing that.
Yeah, I'd agree. I mean, we've added a very specific equity lens to our partner selection, and I think in addition to making sure there's diversity, economic inclusion. You know, we were very, very particular about negotiating the best contracts, but a lot of the service contracts translate into wages for people. So being mindful about what the negotiation impact is on the wages of people. You know, much like everyone else, we lifted what our starting wages are, but if we're doing this on one hand, we're doing philanthropy on the other, but then when we're negotiating our contracts, we are driving down the cost. People can't pay wages. So it's a combination of making sure we have diverse suppliers, but also that the wages they can sustain based on the contract are living wages.
And I agree. The work in process, Simeon,
Mm-hmm.
and we have taken steps to bolster our supplier vendor, procurement process. This question also intersects with environmental, social, and governance. Fortunately, initiatives that are in the world and coming to the fore. So again, I think we should be optimistic that we can continue to make progress on this activity as well.
Absolutely. You know, it's really interesting. I think one of the promises of Greenlining that strikes me, at least, as one of the more fascinating elements is the chance to kind of have more consistent behavioral alignment. So you rightly point out the ways that we undermine some of the progress that we make with behaviors that are inconsistent. And so, you know, the ability to really lean into not just economic growth, but, kind of shared prosperity really does then require some certain kinds of behavioral change. Marty, you pointed to environment as one of those in the ESG kind of portfolio, but there are actually a couple of questions that came in. Dan, you actually invited her into the conversation. Barb at Anchor Cove asks about what banks are doing to support a just transition to address climate change. And Abby McHugh-Griffa from the Climate Solutions Accelerator also points to the Greenlining Institute's work around transformative climate communities and the ability for folks to invest in and participate in the clean energy economy. Any role that your institutions are playing with respect to this kind of interface, this interconnection between communities that have been marginalized and these burgeoning opportunities in green and clean tech?
The other aspect on climate change that I think is interesting, and we don't really think about the risk of climate change to our customers that we lend money to. If there's a hurricane or something destroys a building, and and we have the loan on it, that's the other climate change risk that we have to think of at the bank. But in terms of doing our own part, I think all of us, and it's not like we're going to be putting solar panels on our branches. We looked at that. Maybe it makes sense now, but it is a really important item for all of us in terms of simple things like paper, for crying out loud. I mean, that the pandemic got us out of the paper business, and we learned new ways of preserving that way. But this whole ESG that Marty's talking about is a hot topic at every management group meeting at M&T, and how we invest the customers' money into companies and how those companies are in terms of their ESG profile. And I guess the interesting stat I'll say real quick is that when you look at companies to invest in that have a high ESG standards, you'd think, well, maybe you're going to lose return because they're spending more money being that socially conscious. But the reality is those are the best managers in the world. And because of that, they can manage to the ESG guidelines that we have and even giving greater returns, or those are the companies you want to invest in. So obviously we would want all of our institutions to be in that same crowd. So, we don't have a lot of, we don't produce coal or that sort of things, but there are a lot of other things that we can do as institutions to reduce our effect on the climate.
Yeah, we have a pretty robust Key for Green group and division that all over the country. I mean, we're from Maine to Alaska, and that's a focus. As Dan was saying, I mean, we talk about it for years, and it's slowly starting to come to the forefront. But it is something that's we have to pay more attention to. I mean, I know our former presidents from probably the last 16 years have been talking about it, and it really hasn't gone the way we probably wanted. We want it to go a little bit probably quicker. First, we work a lot with universities and hospitals who are trying to implement that around the country. I think that's a good start. Divisions in the neighborhoods. I know the city of Rochester has been looking at things the last few years. And as the four of us sit here, I mean, I think we'd all be remiss if we didn't think that, it's something we have to develop. It just takes a lot longer. I'd like, Dan, if you guys put them on your branches, that's awesome. I think we should be doing the same thing. We certainly have, not today, but we usually have a lot of sun out here. But I think that the person who asked that question, they're spot on with that. It just takes a lot longer to not just develop it, but educate the individuals that this is a good thing, and it's going to happen. I'd like to happen in my children's lifetime, but I'd like to think that it's going to happen sometime, in the very near future for all of us.
Simeon, it's a risk. It's a risk in the world, as we all know. It's a risk to the economy. And as recently as yesterday or the day before, in the confirmation hearings of the renomination of the Federal Reserve Chair, these questions came up, and he sees it as a risk for the banking system. And we're all regulated institutions, so we'll continue to build on accountability as well as contribution to the solution here.
Absolutely. I mean, there's clearly a real both set of risks, but then also significant opportunities in this field. And I know that certainly at the Community Foundation, we're lifting up environment as a key area for action and investment. I wonder what you all see as the possibilities for kind of collaboration in this space. Phil, I know you pointed earlier in the conversation to the fact that there is, certainly a competitive environment here, and we, would be naive not to acknowledge it. But do you all see any opportunities for kind of collaborative action or to work together on climate?
I would never say no. I think there's always an opportunity. I think everybody, the three gentlemen that are on here with me, I think they've absolutely shown over the years that they're completely committed to the community. I mean, whether it's just been through their positions or their personal lives. So I would never say no to that. I think it would be great. It's probably not the easiest thing to do, to be honest, but I don't want to speak for the other three gentlemen, but I would be certainly in favor of something to that.
I agree. I mean, I think it'll take a combination of public policy, philanthropy, and private sector. Public policy is very important to help the businesses who have to transition on this. I think, like with many of our community efforts, as Phil said, we do compete, but when it's something of community impact interest, we have always have had a community of interest, and everyone tries to work together on that.
I think, Simeon, what we can do is set the example for collaboration and leadership and join the conversation to try to help solve or lead to a solution to some of our most complex problems. This is a complex one. The other things we're talking about this morning are extremely complex, but I think to the point of your keynote, we can do this.
Well,
while I would be all for collaborating, but the other thing that I think is interesting is that, hey, we're competitors, and so we're all trying to differentiate ourselves from each other. And so there's a race right now because when we're trying to win a piece of business at another bank, not our four, okay, but at another bank, I can't tell you how many questions now come back. tell us about your diversity initiatives.
Mm.
Tell us about your ESG initiatives. So participating and really leaning in to these types of things are so important for us as an institution to continue to succeed. So there's another angle there that I think is important.
No, you're absolutely right. I mean, if you
Our customers are demanding it, I guess is my point.
And it's, yeah, no, if you consider the at the related to the keynote, at the time that the New Deal was introduced, we were in the midst of significant economic change, right? Transitioning from an agrarian economy to an industrialized economy. And some of those changes, that milieu, is what drove some of the responses. And so you consider that as we transition fully into a knowledge-based economy, and ideally a regenerative economy, that we really have to then take different approaches. Dave Ferris asks, he applauds the local commitments related to different approaches. He wonders, do we ever market as a group promoting the local commitment, and particularly some of the first-time home buyer programs, particularly in the city? Is there a chance for some kind of event to invite persons to come into any of the local branches? Because he notes that the economic vitality of Rochester increases and all the institutions subsequently benefit. Is it as a practical matter?
There's something. Beverly is on the phone. She runs our CRA, our community reinvestment group for the bank here. And I don't know what, the pandemic kind of puts us all like back, trying to remember back, but maybe a good example of that I thought was successful in the time was City Living Sundays. I thought that was a really good program that really marketed, housing in the city and provided a lot of education around first time home buying. And our branches were all engaged with that. So I don't know. I think everybody on the phone was in that. Well,
we had the same thing. Go ahead. Sorry. Go ahead, Marty.
Just gonna say, I agree with that. And the other thing, Simeon, is that we all operate branches. We all encourage the general public to walk in and talk to us and share their challenges, share their opportunities, and let us help them solve those. And that goes against the trend of non-banks or other approaches where banks are closing outlets, and the opportunity to deal in person with extended members of our team.
That's a great point, Marty. I think before the pandemic, as we're still in the midst of this, and it's we're trying to protect our colleagues in the branches. I think it's old school. But that's what branches kind of served, is we're strategically placed in neighborhoods for a reason, to have individuals walk in and ask about whether it's wellness or financial wellness, or if it's about first-time home buyers, about trust, about anything. I think to get in and talk, and again, I say old school. We're all here on a Zoom, where I would wish we were all together. It goes without saying that the last 96 weeks we've kind of lost the communication aspect of day-to-day business. Just getting in and just having a conversation face to face, it doesn't make a difference if it's a smaller issue or a larger issue. It's an issue, and I think people have kind of lost that. So I would encourage folks on the call and just in general, walk into ESL, walk into M&T, walk into Five Star, walk into KeyBank and have conversations. That's what they're there for. Because what we don't want to do, and I'm getting off topic here, but what we don't want to do is 10 years from now is have less and less branches, because there seems to be less and less need to have individuals go in. So we encourage individuals within the city to go in and just have conversations, just talk, and nothing's going to come out of it unless you come in and actually put in the effort. So I would encourage that.
I agree with all the comments. I think at the end of the day, this is part of our learning process. If we're putting these programs out and we're not getting usage, that's telling us either it's program design, communication. At the end of the day, measure has to be how much people are using the programs and benefiting from that. And whether it be because we need to increase awareness, but certainly everyone on this call can help increase that. But I'm sure all of us will continue to examine, are we achieving the results? And if we're not, looking at some of the underlying reasons why we might not be. I know in the past we've introduced what we thought were brilliant, cheap, low-cost products, but no one used them. To us, it made a lot of sense, but you have to look at what the market's selling you, and then be it through various communication methods. If communication is the issue, make sure we're getting to people.
So we are about 10 minutes from close here, and we have a couple of ministerial things that we need to do. Number one, a poll will be launching shortly that's going to ask you 3 short questions about your experiences today. And so please respond to the poll. And as I said at the outset, I understand the assignment. So the assignment in this case is make sure you understand the assignment and respond to the poll. The poll should be up now. You should be seeing it on your screen. 3 radio button polls to respond to. Back to the panel. The Martin Luther King at the National Cathedral, March 31st, 1968, said these words. He said, "This is America's opportunity to help bridge the gulf between the haves and the have-nots. The question is whether America will do it. Nothing new about poverty. What is new is that we now have the techniques and resources to get rid of poverty. The real question is whether we have the will." Incidentally, this will be the theme for Martin Luther King Day this year, which will be a virtual program in light of the pandemic. I suppose that I'd like to ask each of you to just kind of reflect on this idea of generating the will. There's a lot of economic headwind. There's old policies and practices in your respective institutions, broadly as a community working in collaboration. Any insights, thoughts that you have about how we muster the will? Why don't I'm just going to take it around the screen here. Marty?
Absolutely. We have to have the will. What the pandemic is, the silver lining of the pandemic is that it's reinforced, the rate of change and the opportunity that comes with change. Change is the cost of progress. So at our institution, personally and professionally, I'm open to it, and whatever it takes to jumpstart and get the conversations going in the right direction, whether you're talking about our country, our state, or our community, there's a lot of work to do, but we have to start, and let's lean in and work together to get on the journey and get on the rails of greenlining.
Phil?
I mean, Martin Luther King, obviously one of the greatest ambassadors of any generation, but here we are 54 years later and we're still talking about it. So, we've made, in my opinion, very little progress, as much as we probably should have. And he probably would, if he was still around, would probably think the same. We have to keep talking about it, but talking about it is just talking about it. There has to be action. I really feel better as far as direction that a lot of organizations have taken, not just the 4 institutions on here, but a lot of organizations have taken the DE&I component very, very seriously. But I think that talk is, the old saying, talk is cheap. I think action has to really take place, and I feel that my generation, my children who are 19 and 15, so they still got a ways to go. I think it's going to be on their shoulders as well, but I think we have to start getting these words into formal actions that will actually mean something. So that way, said 54 years ago, he made that point, and it really hasn't gone as far as I think he probably thought it would. So I just think we have a lot of work to do.
Dan, do we have the will?
I think we do. And listen, I think we all love this community. We love Rochester. We've raised our kids here. We want it to thrive. And to Marty's point, the silver lining of the pandemic has I think it's allowed us to kind of look inside ourselves as individuals and say, okay, well, what else can I do? I don't like what's going on out there. I need to pony up here and get on my horse and start to make a difference. So We have all, I think a lot of us on the phone have been trying for how many years ourselves? I'll count between, I think on this phone, it's probably 100 years of trying to make a difference. But I think we have the resources to make it happen. And we can do this. I really believe we can.
And Fahey, your thoughts, do we have the will in this community?
I think we have the will, we have the opportunity, we need to have the accountability. I think for us as leaders, we need to take that responsibility on. And at the end of the day, leadership makes a difference in this area. How one keeps it a priority, as I said, it's accountability and leadership. Typically, I find if things are embedded in strategy and a culture is developed around it, things get done. Strong businesses, if they truly have something in strategy, it becomes a priority. But I do think accountability and leadership always are important. And I think I said this earlier. I think everyone on this panel takes their responsibility and opportunity very seriously, understands the opportunity we have as individuals to influence our community. And I think that's something we gravitate towards, and we will create the will.
Thank you all so much for participating today. We have a number of questions that are left in the chat, and there's clearly a lot of interest in this arena, a lot of interest in this dialogue. And I think it's fair to say that it's worthwhile to keep the dialogue going and to convert that dialogue into action. It's also one observation that I've certainly had during my time engaging in the community is that at times there's a tendency to talk in either tropes or to think about folks purely in the roles that they have or the jobs that they have and the perceptions that go along with those roles, instead of moving even beyond that and getting to know the people. There are a lot of folks that would say, oh, those banking executives, I think it was acknowledged earlier about some of the distrust in the community, in the industry, in some cases because of the history that's certainly understandable. But it's also the case today that all of you have joined here and been a part of this conversation. And so I want to express my gratitude on behalf of the community, and also acknowledge, as Dan and I did earlier this week on Evan Dawson's show, the progress that our community is making, that banking executives and credit union executives can come together in this community to have this kind of conversation. So thank you again, and a round of applause. I guess I'm the only clap that folks can hear, but I'm doing a couple hundred folks that are in the room. With that, I'm going to turn it back over to you, Jerome, to give some instructions for lunch and let folks know what the next steps are for this wonderful conference. And thank you again.
And good morning again, and we're just gonna land this plane exactly when we said we would land it, right about 11:30. So that means I have about a minute and a half. I want to start with my thank you to you, Simeon, for moderating, and thank you to our panelists, each and every one of you, for investing this considerable amount of time in what is an extremely important issue to discuss. And again, Simeon mentioned there are many, many questions that we will follow up. There were questions that, just because of time we weren't able to get to. People are asking for your contact information, the panelists, because they want to follow up with you because they heard things that were encouraging. Again, as we mentioned in our prep, this is not a beat up the banks, and all of you said as much that the banks still have work to do. There are things that are happening, but none of us are satisfied with where we are, but we are encouraged. So we will follow up. For the attendees, thank you for leaning in as much as you have so far. We're going to take a little break because one of the things we learned last year from our virtual conferences, don't keep people on Zoom all day. So take a break, stretch, do what you have to do. Check your email, do nothing. The African Cup of Nations soccer games are on. You could check in on that or do whatever it is. And we'll see you back around 12:45, where this afternoon we're going to be looking at maternal justice. We have an amazing panel for you this afternoon to talk about, the disparities in maternal health, infant mortality, that we absolutely abhor and we need to do something about. So just as we're attacking redlining by counteracting it with greenlining, we're going to look to attack that as well, because we want to take action to make a better community. Thank you all. See you this afternoon.